How did 2024 end up? What's going to happen in 2025 when it comes to the economy, when it comes to the stock market? Well, we don't really have a way of knowing exactly, but today we have a very special guest, Tom Siamatis, who is a chief market economist, and he is going to go through all the details. Enjoy this episode.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement Podcast. We are excited today. It's a really special episode for us. We've got a special guest with us, Tom Siamatis, and he came all the way here to work with us. He actually works with us on a little bit more of our research back office associated with AE Wealth, and so we thought we'd have him come on. He's a chief marketing economist. So thank you very much, first of all, Tom, for coming on and chatting with us.
Oh, glad to be here. Thanks for having me.
So I think we just want to get started. And anytime we can talk to somebody who's an economist and looks at the big picture more than just saying an individual investment is if you look back at 2024, how would you sum up 2024?
So the way I look at 2024 is it was a year for patience, right? I mean, there was a lot of stuff going in to 2024 that just didn't happen, and there was a lot of opportunities for people to just kind of go sideways or throw in the towel, right? I mean, we went into 2024 thinking we were going to get 7 interest rate cuts, right? Then all of a sudden that became 3. Then all of a sudden it became none. Then all of a sudden, it ended up being somewhere in the middle. There was that. There was also concerns about, the economy falling off a cliff and us getting into recession, right? There was stubbornness with respect to inflation, right? You had a huge overhang with the election coming. Were we going to, tack one way or another when it comes to policy and direction, economic direction? But yet, through it all, the market seemed to be very, very resilient, right? Every time we seemed to get bad news, the market just seemed to shrug it off and ignore it. We had incredibly low volatility for most of the year. And there was ample opportunities where people could just said, you know what, the news is just so bad out there that I need to get out. And if you did that, you made a super bad mistake at that point, right? Because we had the best 2 years since 1998, back to back. We had 57 record closes on the S&P 500. And if you got out after the first one, you missed 56 record closings, right? And everything in between. And so to me, last year epitomized the whole point of being a patient, long-term, plan-oriented investor.
Yeah. I mean, I would second that. Last year was in our podcast and the communications with clients. There's going to be a lot of things going on. We don't know how this year is going to end up, and it ended up being a pretty dang good year with even all the stuff ahead of us. And so now, Tom, we sit here in 2025. The election has happened. Inauguration is on its way. We've got a clean sweep on the Republican side for policy. So let's just start there, I think, because that's what's on everyone's mind is with a full Republican based policy. What are things that you think are going to come down the line? What are things that you may be worried about from an economic perspective? And just tell us what's going on in your head and things that you're paying attention to as far as what's going on in DC.
Sure. So I think anytime you have such an abrupt change, right, and such a, large shift to one side or the other, there's always going to be some apprehension, but then there's also a lot of excitement. Year, right? There's all these possibilities that can happen, right? And I think one of the big knocks that we had with the prior administration was they felt that there was a lot of regulation. They felt that there was a lot of, a hostility toward business. That seems to have changed. Now, what's interesting about it is it's not as one-sided as we'd like to think because the margins in the House are super thin, right? And, trying to corral those cats is a very difficult process, right? But I think there's enthusiasm because we potentially may have a more business friendly climate, right? So look at what happened when Trump got elected, right? All of a sudden the market rocketed up, right? You've got a situation now where a lot is going to have to get done. And I'm not talking about the more like the social issues like border and all that stuff. I'm just talking about economically speaking, right? You got a lot of things that you're going to have to get done, not in 4 years, but in 2. Because, like as a nation, we have an attention span like that big. And so, the midterms seem like they're a million miles away, but if we don't get stuff done, then there's a very real chance. And, look what happened to both the prior administrations. When Trump lost in the midterms, you had all that impeachment stuff. You had all of this stuff going on that really we weren't going anywhere. We were just treading a lot of water. And the same thing happened to Biden, right? After 2 years, the Republicans won back a narrow majority. And then all you had was, all of these sort of investigations again. So you got to be mindful of that. So I'm excited for the most part that I think that you're going to have a less regulatory environment and a more business-friendly environment, which should help the broader market, not just technology that's been leading the way. The other thing that I'm super excited about, and this may be a little bit controversial because it's happened a gazillion times before, is I'm actually kind of psyched about Doge, right? Because we've had these commissions where people get on there and they say, well, we need to talk about, government excesses and waste and all that. And what happens? It takes 1.5 years, 2 years. They produce a stack of papers like that, and they go into some filing cabinet. And, again, we mentioned how you have these short attention spans, right? What I think is different this time is you're literally going to see in real time, right? When they find abuses in the government, it's going to be all over, X or Twitter or social media. And I think at that point, couple that with our attention span, right, is we can't wait 3 years for the report because nobody's like, what was this report about? Now it's like literally they're going to tell you, listen, we're giving squirrels cocaine and spending government money to give squirrels cocaine and have them do stupid TikTok videos. People are going to be, that's crazy. Why are we doing that? And they're going to demand action. Right. So I think this time around, that I'm excited about. It's going to be basically a 2-man lift at this point. We need to stop the excess spending that we have on silly stuff that we don't need. And then we're also going to need to spur economic growth, which I think lower regulation, more energy exploration, things like that I'm excited about those type of things that I think, again, but a lot of it's kind of going on like your third date with somebody, right?
Yeah.
It's all good, right? You don't see anything bad until, you've been with that person for a while. So I think the first 6 months of the year are going to be super exciting.
Yeah.
But how much comes true, I don't know.
Could you, just for folks who maybe not are, as attuned to what you're talking about, could you kind of explain what that is, what Doge is, and what that really is?
Sure. So that's the Department of Governmental Efficiency, right? And for a long time, actually, ever since my entire adult life, we've always been told, well, why can't we get a business person as the president? Well, we got a business person the first time, and you saw how that went, right? There was a lot of hostility and pushback from internal Washington, and I think Trump learned a lot from that. This time around, this Department of Government Efficiency with Elon Musk and Vivek Ramaswamy, leading the thing, they're actually external business people who've been super successful, right? So they know how to run a business. They know how to read profit and losses. They're not constantly just assuming that money is just flooding into their businesses from on high. So at the end of the day, they're looking at it from a different perspective than what Washington has traditionally looked at. The way they did with the spending. It was I don't think Washington ever saw a spending plan that they didn't like.
Yeah.
And so I think when you have those type of forces putting pressure on it, now you have to realize that there's a lot of, the entrenched machine, if you want to call it that. It's all marbled in there, right? I mean, it's going to be nigh on impossible to get rid of a lot of that stuff. But if we can at least get the government on a sustainable path, something we all do every day, right? Mm-hmm. We have a budget. Sometimes we have to tell our wife no, or our kids no, that they can't buy something or whatever, because we have to save for it. Sometimes we have to, endure some little bit of sacrifice. I don't think the government's ever had that kind of, motivation.
Right.
And now you have people from the outside that actually have a mandate. and they have the ability to get that info out before we get into the 80,000 page report.
Yeah. So what do you say to the person that is, this government efficiency thing is, it's new, it's fresh with the idea of outside counsel. But then those guys are also businessmen that have their own agendas with their own companies and things like that. What do you say to the person that says, well, they're just going to kind of do whatever they want in their own benefit? What do you say to that?
So now you're talking about human nature.
Yeah.
Okay. So we can go down the theological path if you want, right? I mean, listen, at the end of the day, you hope, and that's what we really do. We all hope that people do the right thing. I've always said, listen, our biggest deficit in this country isn't a financial one. It's a moral one, right? It's can you find people that can do the morally right thing? The thing I like about these guys is I don't think Elon Musk, and people can argue with me, needs any more money.
Sure.
So it's not like he's going to go tell the government, we need to have everybody in America drive electric cars because I'm going to make more money.
Right.
So from that standpoint, I think you hope that he bought Twitter, right, and paid $44 billion for them. And it wasn't worth half of that. So he did that because he claimed he valued free speech. So if I'm thinking, if that's some sort of, merit badge for him, I would say, hopefully he takes the same approach. I agree with you. I mean, people can go wrong and do all the time, but we're seeing wrong now.
Right.
We see government, putting us into, a $36 trillion headlock.
Mm-hmm.
So something's got to be done. Now, you hope that these guys do it. And I think as Americans, we're all generally optimistic.
Yeah.
You hope that somebody loves the country enough to fix things that at least we can somehow, pass this on to our kids and our grandkids, but I can't unequivocally say, these guys are going to be squeaky clean, but I'm glad they're not getting paid by anybody.
Right.
So,
So we operate, Tom, in our firm pretty much as a politically agnostic firm. We don't really, from an investment style, from an office perspective, Merce and I pretty much, down the middle of things. Now, we see things, we hear things, and you kind of wonder how that's going to play out. Just last week, I had a client come in, and he said he is scared to death that everything is about to fall off the charts because of because his leaning is that he's not that happy about the incoming administration. Then the next day, had a client come in, and he is extremely excited and is very happy about the administration that's coming in. And he thinks, man, this is about to take the market and it's going to rock. So we've got both sides. So just you looking at the economy and things, how do you see 2025? You just said, we just had a couple of great years. How do you see 2025 now coming in and adding to the 2024 run, or do you see it having some obstacles that's going to be a little difficult for it, or how do you see it?
So I would say to both of these folks that you just mentioned, it's going to be somewhere between them. So you guys are spot on with being right down the middle with stuff. I think what's going to be interesting is we're going to have this directional change. There's going to be a lot of excitement of possibility, right? And I think if those things don't get done, we're in for some struggles, right? So it just depends on how ingrained and entrenched the status quo is and what that is to the market. So this year so far, I think the market will be okay. I mean, we'll probably be up about another 10%, right? So I'm looking at maybe like 6,600 in the S&P, somewhere around there. But if things don't get better and there's not measurable things, usually the second year of an administration, I mean, I look at 4-year cycles, is usually the most challenged one because that's kind of when reality hits, right? It's like we've got all the excitement of the first year and incoming administration. Look at all the wonderful things that are going to happen. And more of like your second client is going to be, be fed at that point. But then when things don't happen because, the way Congress works and the way the system works, there's all those entrenched interests that don't want to change anything or throw sand in the gears. And sometimes that's a benefit, right? Sometimes there are bad ideas that don't need to be executed on. But if there's more bad feeling as we get into a second year, that's usually when you have a challenge. So I think that's the big unknown at this point. I think this year we're fine, at least for the first part of this year, right? Who knows what happens 6 months out? It's hard to predict that far out, but for the first 6 months, I think we'll be okay. But then the next year, what's interesting is that if things unravel and become bad, then you're pretty much looking at split government after that, and then nothing will get done. Right? So it's really not a full year cycle.
Right.
So everyone's like that's like down in the dumps and thinks to themselves, "Oh, my guy or my gal didn't win. This is going to be awful for the next 4 years." Or my guy won. This is going to be great for the next. It's really a 2-year cycle.
Right.
So
Yeah. So on that note of, where 2025 is going, if you just look at post-pandemic from 2020 onwards, the leaders, the drivers of growth in the markets have really been your large companies that could survive, right? Didn't have to shut down, found ways to still operate, generate good revenue. And then your tech companies that were right next to them as well. And you mentioned this word, which everyone talks about, is this broadening out that we're starting to see. Because, in my eyes, it's kind of a little scary that the market just the growth last year was really the responsibility of that growth was from a handful of companies, right? 7, 8 companies that really drove that. NVIDIA and what happened last year with AI, it really drove and pushed the markets. So I like this idea of broadening out, that we're not relying on 7 companies, but what is this broadening out that we hope to see, and what areas of the market, and why is it possible for that to happen now?
yeah, so I think it goes back to the for lack of a better description, is just some more deregulation, right? I mean, small companies. I was at a meeting a few weeks ago, and there was a guy who built homes, and he said 24% of the price of a home is in regulations, inspections, things like that. So, people complain about the price of housing, for example. Like, that's 25% of it is that. Okay, so that's just an example. If we could lessen some of the regulatory burden, what that's going to do is going to allow people not to spend money on paying government bureaucrats. It's going to allow them to put money into the businesses, right? And hopefully that leads to hiring, and that leads to expansion. The other thing is, obviously the tax laws that are supposed to sunset at the end of this year need to be expanded and either need to be extended or made permanent, right? But when you're going to start seeing growth from the bottom up. And I don't necessarily see the tech companies falling back down to market levels. I see the market sort of bubbling up to meet them. We're still going to need, our Apple gadgets and doodads. AI is still going to be a thing. I just don't think they're going to be as big of a growth engine as they've been the past couple of years. But I see the rest of the economy sort of broadening out, growing to meet them, as opposed to the other way around. And, at the end of the day, the other huge thing that we really didn't touch on is energy, right? If they follow through on energy policy and make energy more affordable and more dependably affordable, that could have a huge impact on the economy and, our growth. So it's going to be getting government under control, which is one thing, which is a huge lift in and of itself. And then it's also generating an economic environment that, basically we make up the market behaving a certain way is going to make up for the fact that the government is spending less, and we're growing ourselves out of it. So it's a balancing act, which is really a challenge, in my opinion, to carry off. And that's why I think 6 months were good, but
So I got a question. I didn't even ask you this prior. So if you don't have a comment on it, we can skip it. But I'm just going to ask it anyway.
This is when it's about to get good.
Yeah. So I'm just I hear this stuff, and then I wondered if it was even real, and then I saw the actual clip, and pretty sure he said it. But Trump has come out and pretty much saying that he thinks that we ought to do something with Greenland and Panama Canal, and even with Canada with tariffs and that kind of stuff. I mean, how realistic that is, I don't know. But do you think that kind of, I don't know, leaning in the context of even trying to go after that, will that make things a little rocky from a market perspective?
It's great headlines. I don't know that it's going to impact markets per se. The thought with Greenland and in Canada is more like, and in Panama as well, is more national security stuff.
Right.
I don't know how much of this stuff you can really take that Trump says literally.
Right.
I think directionally, if you get Canada to, behave better when it comes to, trading with us or paying for its security, if you get Greenland to, maybe there's energy reserves up there, whatever. I mean, I don't know what the geopolitical implications of it are, but it's not like, we're going to find, a gazillion barrels of oil under Greenland, or, that's going to make an economic impact on us, or there's gold in them, there is in Canada. But, I think it makes for interesting talk.
Right.
Right. And I think it'd be fascinating, but I don't know that it's going to impact stock market or bond markets anytime quickly.
So the big buzzword last year was inflation, and what is the Fed doing? And today we've had a handful of rate cuts, not as many as were expected, like you said. This year, I think 2 to 3 is kind of what's projected. I don't know exactly, but there's still rate cuts to be had, is for sure. And I was in a meeting just the other day saying, inflation is going down and rates are following, and hopefully mortgage rates at some point follow that as well. And then the response back to me from the client was, well, I don't think inflation's going down. The things that I buy every day still feel very expensive. So, the consumer is still feeling it, even though we're being told numbers are going down. So do and I know inflation is in a bunch of different categories, and that's how those numbers get put together. But do you feel, I guess my question is are we on the right path to get to this target of 2%? And do we see that happening? But then also with this change of president, and then also all these different things that could potentially happen, could that derail us and send us back upwards in the inflationary world?
Yeah. So the interesting thing about inflation from my standpoint is that the Fed, why they're cutting when they're not anywhere near their 2%, seems sort of backwards, right? What I look at primarily is the 10-year, right? And if you look at the 10-year Treasury, it's not happy with what's going on, right? So I've maintained that in order for us to get us down to 2%, inflation rates would have had to stay up higher and longer for whatever reason. I don't know whether it's political, whether it's, just pressure from politicians, outside of the process. The Fed has decided to manipulate the short end, right? What they can. But what people need to understand is that the Fed impacts short-term rates, the market impacts long-term. So what's the market telling us? If long-term rates are going up, it's telling us we don't like the government spending, and we don't think inflation is going to come down, right? So that's sort of the melting pot that's going on there. That's sort of the soup that's boiling. The problem is that if you put more costs into the system, a la maybe tariffs and things like that, that may have an impact on inflation, but it may not, because there's other forces at play. I think inflation it's going to be very difficult to get it down that last 1%, right, to the 2 or below level. And I think the biggest culprit, in my opinion, in that right now is it's energy, right? And we talked about it a few minutes ago. If you can get dependable lower energy's in everything, right? It's in transporting, it's in manufacturing, it's in storage, it's in everything. And if I can't count on my energy coming down, that's why I'm kind of enthusiastic about, the new energy policy potentially. If we could get energy prices to the lower dependable level where people are comfortable enough not having to hedge themselves with their pricing, that would lower prices, right? At some point. Politicians and economists and all that, they make all of these. I mean, there was 400 economists that told us inflation was transitory at the Fed.
Mm-hmm.
You can believe what you see with your eyes. And so I think your client is right when they're talking about, and they're saying, listen, you know what? My everyday is expensive.
Yeah.
So I don't know what they're talking about, because if we're measuring some cost of goods, basket of goods that nobody buys, like candlestick holders or something like that. Who cares? Right? Oh, those are cheap. Well, how many candlestick holders do I buy in an average year? You don't. But I buy gas, I buy food, right? I have housing costs, and those aren't coming down. So to me, deregulation, again, I go back to deregulation and energy. If we can get those two things under control, you will see a decline in inflation, because one is big inputs into inflation are housing costs and energy, even though some measures of inflation strip that out, which is ridiculous to me, because I think that the three most important things in a person's life are, heating their home, having a home, and eating, right? And yet some of these inflation measures don't even measure that,
Right.
which is kind of crazy.
Well, Tom, it's when we do this is very helpful to our listeners, and just being able to talk to you. I know just for the listeners' benefit, we've actually asked Tom, would he come on quarterly and kind of help us to look at things from a big picture perspective, not just trying to go look at a particular stock or investment. And so we appreciate very much you coming in and spending some time with us today and sharing your insights. I know that our listeners really like it because it, again, gives them a different perspective. So we really appreciate it.
Sure. I'm happy to do that. Anytime you guys want me, I'm happy to come out here to beautiful North Carolina.
Yeah. Awesome. Well, thanks a lot, Tom. Thanks for being here.
We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.